Awesome. All right. Thank you, Jasmine, very much. I appreciate that introduction there. And it's a pleasure to be on Zoom here with all you beautiful people this morning. Thank you all for joining me and having me on here as a part of this. And I think Jasmine really set the stage really well. Today I wanted to talk a little bit about, the world of money and finance and in the process of kind of healing moving forward after the loss of maybe a loved one or somebody close to you. And And I just wanted to also thank Mary and Jasmine for inviting me to be a part of this event. It's a real treat to be on here with all of you. So, kind of diving into this conversation, our company's motto, we're centered around the world of creating a life that you love. And what we're going to talk about today is I'm going to share a little bit with you guys about CSP Financial Group, a little bit about myself and about Charles. I'm going to talk about, why this conversation matters. We'll talk a little bit about the world of wealth transfers, inherited accounts, what they call the widow penalty, and then we'll touch a little bit on estate planning, and then I'll share a little bit further. I did a generic John and Jane, but I'll tell you a little bit about a personal tale of a particular client that we dealt with over the last year who was going through a really tough transition during this kind of situation. And we'll close out with just some closing thoughts, a little bit of time for questions if anybody has any that come up. So as we're diving in here, the reason that we exist as a company, CSP Financial Group, is to inspire humanity to create a life they love. And our vision is a world where everyone discovers their true purpose for life, money, and their American dream. And our mission is to inspire individuals and families to live their purpose through coaching, education, and planning, leaving them with peace of mind. And our values are integrity, trust, faith, freedom, and commitment. So a little bit about me. My name's Kai Jacobs. As Jasmine mentioned, I've had the privilege of getting to know her and Matt, and I actually met Jacob a little bit earlier this year. So it's been a real treat to get to know some of their family a little bit better over this past year. I started in the financial services industry coming on almost 4 years ago now. I'm currently enrolled in the tax planning certified professional course, and I've got all my applicable licenses and all that. And then a little bit as well about Charles Pettit. Charles has been in the financial industry for about 30 years. I've had the privilege of coming into this industry and getting to work under him and be mentored by him. And it's really been a treat. And that's how I've really come to learn most of what I know nowadays. So why this conversation matters, especially in this world of loss when we're talking about this kind of thing. The thing with these life transitions and things of that nature is they tend to also run in tandem with financial transitions, right? As Jasmine mentioned, and we'll talk a little bit about estate planning in a little bit, but when that time comes, a loved one maybe passes away, then we get into the world of, who's the power of attorney, who's the trustee or executor of the estate, what's going to happen with the different financial accounts, what's going on with the execution of the estate, right? So those kind of decisions can start to feel a lot heavier, especially when those emotions are heavy in play. And it's common really to feel overwhelmed or unsure of where to even start, really. And just having, I think, some tangible pieces to kind of start with and piece things together can help bring some relief and confidence in that area. And just something I want to note, you don't have to have everything figured out today. I mean, it's a process that really takes time. And I'll share a personal story of a client a little bit later on. But, even when everything comes together just right, it can still take time to really sort through all these different pieces. So I don't want you to have to feel rushed in that regard. So some of the things that we see most often in this world of grief and transition is, maybe you've got a parent or a loved one or a spouse, something of that nature, and they pass away, and then all of a sudden you've got accounts at, maybe it's 3, 4, 5 different financial institutions spread across the board, different transfer paperwork processes that you're sifting through, trying to figure out, there's what they call the 10-year rule. And that's when somebody passes away, they just changed that. I believe it was back in 2019 to where now if you inherit an account, you've got about 10 years to draw out of that account. And we'll talk a little bit more about that. But it becomes a lot trying to hunt down all these different accounts, right? And then you're unsure, what decisions need to happen right away, what can wait a little bit longer. You get things like, okay, well, the mortgage needs to be paid, these things need to be handled. Okay. And then you've got, worrying about making the wrong move. That's something that I think I see a lot very often where people get stressed out. They don't want to pull something out or do something with something because they don't know what's going to happen or what the impact might be. You got a lack of confidence potentially or clarity around the next steps. And sometimes there's pressure from outside voices. I see it super often where folks pass away and then maybe the old advisor or someone they trust and are close to them tell them, oh, you got to do XXX with that money, or you got to do this or that, and it starts to feel a little bit stressful, feeling like maybe you should know that already. And it's tough to know who to trust in that world, right? So, just some ideas as far as where you can start, right? Some first steps that can help to create some clarity. Number one is getting organized, right? Reaching out. If somebody, hopefully, maybe they've created a list of the different financial institutions they've got. If they didn't, maybe reaching out to those financial institutions. Usually you can call a general help number and try and get a statement or file a beneficiary claim. And then as well, reviewing the beneficiaries on everything, right? I saw it very recently with a client whose father passed away unexpectedly. The beneficiaries on all the accounts were laid out, but then her last name, she had gotten married, and in that situation, she then had to go through this process of changing her last name as the beneficiary on all these accounts she was inheriting. And then, it took months and months to really get that straightened out. And then from there, starting to identify, what needs to be taken care of right away, what can wait a little bit longer. There are some things that need to be looked at right away, right? We don't want the mortgage to lapse. We don't want any debts to go into default. We want to make sure we get everything squared away as efficiently as we can. But it still takes time, right? Having to enact yourself as maybe the trustee if you're the trustee of the estate or something of that nature. If they didn't have a trust or estate plan in place, then maybe you got to go through the probate court process, which can take a little bit of time. And then strengthening financial safety, right? Making sure that you're set up as far as your protections, your own debts, your own look as far as your assets, making sure that you're in a good position where, while you're moving through this difficult period, I often see folks tend to take some time off, right? A little bit of time to grieve and really be with it and sort through maybe it's going through their house of the loved one or something of that nature. And those things can take time really to heal and move past that. And then clarifying any short-term needs. I often see what a lot of folks will do is maybe the loved one had a bank account or something of that nature with some emergency funds set aside, and then taking that over and then using that to continue to pay the bills or take care of things that need to be taken care of over the next 3, 6, 12 months while everything's being sorted out. And then from there, you can start to create really just a simple, manageable plan forward, right? These are just some simple starting points, not necessarily a to-do list, but it's really just about starting to create some clarity around everything that's going on. Now, I'm going to talk with you all a little bit about the six major areas of wealth transfers, right? And these are the six biggest areas that we often deal with in our everyday lives that can really create unnecessary wealth transfers or things of that nature. Now, the first one's going to be around mortgage structure, payment strategy, right? When you got debts, obviously there's good debts and there's bad debts, right? You get credit cards, things of that nature. Those tend to be pretty high interest rate. Sometimes they can be a low interest rate, which is real nice, right? Like a 0% APR or something of that nature. But oftentimes those credit cards would be 20%, trying to knock those out and then taking care of that mortgage, right? That mortgage, ideally, hopefully it's in a low rate. I know rates were a little bit nicer a few years back and they come up a little bit again recently, but making sure that the mortgage is taken care of and squared away is a really important piece. And then as well, looking at taxes and withholding decisions. We're going to talk a little bit about, the widow penalty, but the tax piece is a really big piece when it comes to a loved one passing away, right? Because you get into this world of inherited accounts, having to draw off those. Maybe they're all pre-tax, tax deferred type of accounts. Maybe that person was taking RMDs already, and now you've got to take out this required minimum distribution from that account. And that can be pretty overwhelming, really. So making sure that you've got a good sense and pulse as far as your tax bracket or something like that can be really helpful. Looking at the retirement account allocation, timing, not getting too emotional around that area, but that area fundamentally can be a huge piece, trying to pull everything together and trying to get it all under the right name and pulling those things together can take some time. Investment behavior during market stress, right? You might be moving accounts while the market's up, might be moving accounts while the market's down, and that can definitely create some volatility from that area. And then you got education funding choices. Maybe that loved one was paying for a loved one's college tuition, something of that nature. Trying to figure that out, that can be a really stressful burden as well. And lastly, any major capital purchases, things of that nature, right? They maybe were financing a new fridge or something along that line, making sure that's all squared away, right? These are just areas where people typically aren't given a lot of clarity. Once they understand the structure, they can feel a little bit more empowered, right? So making sure you start to lay it out, right? You've got your statements, your documents, you look at that. Okay, what are the next steps from that standpoint? What do I need to do as far as tax withholding, things of that nature? And we're going to talk a little bit about that, right? Because when a loved one passes, financial questions tend to appear unexpectedly. And it's common for those questions to kind of be unsure of where to begin, and that's completely normal. So I'm going to share with you all a little bit about inherited accounts, right? So when you inherit an account, there's a couple different types of accounts you might inherit, right? You've got your general accounts, which are going to be your bank accounts, things of that nature, maybe a money market, CDs, right? Those are all going to typically be post-tax. And then you've got what you call pre-tax accounts, right? Those are going to be your IRAs, individual retirement accounts, maybe a 401k, a 403b. And then you've got Roth accounts. Those are your after-tax accounts, right? That could be a Roth IRA, a Roth 401k. Now, all these accounts are subject to a little bit different rules when it comes to the taxation piece, right? So when you inherit a retirement account that's on the pre-tax side, then you've got, at least as of now, if someone were to pass away after 2019, you've got 10 years to draw down on that balance before that account has to be completely liquidated, right? And if it's a pre-tax account, then that's subject to, whatever your current tax rate is. So let's say, for example, maybe you're in the 22% tax bracket, right? That's a pretty typical tax bracket I tend to see. And if you're in a 22% tax bracket, and then now you've gotten this inherited account, what you've got to start to look at is, okay, this inherited account, maybe it's got $100,000 in it and it's an IRA. Well, now you've got 10 years to draw that IRA balance down to a zero balance. And then you could take those monies, you could reinvest them, you can do whatever you like with them at that point. But the big piece is that tax piece, right? If you're in a 22% bracket and maybe you're $10,000 away from bumping into a 24% bracket, then that can create a big difference in terms of what you're paying on your taxes and things of that nature. So maybe that year you want to take a little bit less out of that IRA account. Maybe the next year you've got a little more time off. You didn't make quite as much money. You could take a little bit more out. What you want to look is try and plan out for that next 5, 10 years as much as you can and start to draw out of that account as you see opportunities within your tax bracket, right? Because our tax system, it's a tiered tax system. So as we go up in income, eventually we start bumping into those higher brackets. So that can be a really critical piece. And then say your loved one passes away and maybe they were over the age of 73, and in a few years, RMD age is going to be 75. That's a required minimum distribution. And required minimum distributions are required distributions by the IRS on any pre-tax accounts that are coming out of that age range. So say that loved one was 75 or something like that, and they were taking their RMD out of their IRA. So when you inherit that account, you're now subjected to that same RMD on top of that 10-year window, if that makes sense. So say we're still working with this $100,000 IRA example, right? And you inherit this $100,000 IRA, that loved one was 75, they were taking their RMDs. Now you've also got to worry about making sure you take that RMD out of the account each year over those next 10 years. Now, any amount you take out counts towards that RMD. So say you were taking out 10,000 a year for every 10 years, you'd be covering more than that RMD requirement. but it is an important thing to note just to make sure you don't get hit with any unnecessary tax penalties, right? Now, a little bit less stressful and nice and easy is the Roth IRAs, right? And Roth IRAs in general as a planning tool can be a really, really powerful planning tool, especially for maybe young folks starting out or folks in their earning years, because you do have to have an earned income to contribute to a Roth IRA. And it's a really powerful tool because in that sense, the money's going in after tax and then it's growing tax free, right? So any money you're taking out of that account is coming out tax free. And I know we could probably spend a good couple hours talking about Roth IRAs, but just to give you the highlights as far as Roth IRAs, inherited Roth IRAs aren't subject to the same tax withholding worries, right? So say somebody had a Roth 401k Roth IRA and that had 100,000 in it, you've still got that 10-year window you've got to draw that down over. But in that context, you don't have to worry about, paying any taxes or doing any extra withholding because that money's all coming out after tax, right? And with Roth withdrawals, that can be a really less stressful piece than maybe dealing with those IRAs or things of that nature. Now, in all of these account types, however you're listed as the beneficiary, whoever the executor is, has to go through dealing with that and getting those accounts retitled into your name. And that can take some time, really, generally. I often find it takes, some accounts are quick, maybe 2, 3 weeks. You can get them retitled under your name. Sometimes it takes months. I know the same example of that lady I gave a little bit earlier. I think we've gotten, 3 out of the 5 accounts her father had, but after he passed away, titled under her name. And 2 of those accounts, we're still dealing with those companies they were held with. They're fighting us saying, oh, we want this, we want this. And they tend to ask for a lot of different documents. So some that can be really just helpful is having all those different documents you might need handy. Maybe that's your marriage certificate, copy of your death certificate of that loved one, things of that different nature where maybe it's a pertinent document. Having those quick, easy, accessible can definitely help you going through those transitionary periods. Now I'm going to talk a little bit about the widow penalty. Now the widow penalty is in the world of taxes, and it's kind of about the tax shakeup that can happen when a spouse or a loved one real near and dear to you passes away. And those tax situations can tend to shift pretty drastically, right? Because what starts to happen is you go from this married filing jointly to a single tax bracket, which then changes all your tax rates, all the different rates from that standpoint, and you've got a much smaller standard deduction as well, right? So now you maybe have the same income, but now it might be taxed at a higher rate, especially in that first year where maybe both spouses were earning, and then you're also dealing with all these inherited accounts. So it can start to get a little bit stressful from that standpoint because now you're dealing with, okay, great. Well, now I've got all these accounts sorted out, but oh my gosh, what's this tax piece, right? And then from that standpoint, I really would try not to stress too much about it. It tends to equalize after a few years, but those initial years can be pretty tough, right? And if you're planning ahead, hopefully you can get those monies into maybe a more after tax type of standpoint. But if you got to deal with those taxes, the best approach is just to look ahead a little bit as much as you can. And if you're getting close to that Medicare age, which is age 65 for those of you that aren't on Medicare, where you got to enroll in Medicare, and Medicare premiums are calculated based on the IRMA tax rules, right? So with that kind of thing, then you're subjected to, maybe you earned a lot more in this tax year, you file for Medicare next year. Okay, oh no, now I'm paying a higher Medicare premium for the next year. And that's recalculated every 2 years based off your tax return from 2 years prior. Now, again, Social Security is a big piece too in that standpoint. Now, if you or your loved one, you were married, I believe it's 15 years, then you're able to also potentially claim a spousal benefit. Maybe you were a homemaker or you didn't work at quite a high earning income type of situation, then you can file for a spousal benefit and claim your spouse's Social Security benefit, which can help to offset some of that potential cost during that time frame, right? I like it. Okay. Awesome. So I'm going to talk a little bit about estate planning, and it sounds like someone else will be chatting a little bit more about that later today. And it's a really powerful piece, especially in the world of, setting yourself up for the future, right? So some of the key things you could be looking for is, okay, making sure you've got your accounts all set up, you have your beneficiaries named how you want to have your beneficiaries named. Okay, that part's squared away. You've got some sort of plan in place for how you want to deal with maybe your mortgage, your debts, things of that nature. Really having these all listed out somewhere is really, really helpful for those folks that are taking over, right? I had another set of clients earlier this year whose parents both unexpectedly passed away in a car accident, unfortunately. And then those parents had squared away everything they possibly could square away, right? They had their estate plan in order, they had all their accounts listed out on a piece of paper within that estate plan, and they had instructions for how they wanted their kids to split things up. And then from there, the kids were able to go out and start to piece together a plan, right? And a really powerful piece of that is the estate plan, right? And something that's often talked about is like last will and testaments, and that's a pretty common piece of conversation. But something that's less often discussed is the power of attorneys, I find, and the trust piece, right? So there's really four key components to an estate plan. You've got what they call your living will, and uh, pour over will is another way to call that. And then you've got a revocable living trust. And then you've got your durable power of attorney, and then your advanced medical directives. So, in the context of maybe a loved one were to get critically injured or something weird happened, maybe they're in the hospital laid up, something that a lot of people tend not to realize is that, if your name's not on those different things, you can't technically make those financial decisions for that loved one or that medical decision for that loved one. So, by having your durable power of attorney in place and you've got somebody designated to take over in that context, then say maybe your spouse was in a major accident, they're in the hospital, they can't square away their financial or medical decisions. Well, then you're able to go in and take over on those medical and financial decisions. And that can really help ease any sort of stuff that can come up during that time frame. And then your last will and testament can cover a lot of things, but it doesn't necessarily stop us from being subjected to probate, right? And the probate process is what can happen after maybe a loved one passes away, something of that nature. And then if they didn't have a trust or estate plan in place, and then now you've got to go to the court, you've got to have maybe a battle with somebody else that's maybe fighting you over the estate, or you've got to find a way to make yourself the executor of the estate. And that can be really pretty stressful. Average probate costs tend to average somewhere around 2 to 5 thousand, and that's all public information, right? I mean, somebody could go on and they could look up XYZ and find the probate court records and know all that information about you online. So having a trust can really help mitigate that, keeps it all private. It keeps you out of the probate court from having to deal with any of that. And then what a trust really allows you to do is dictate, who receives your assets, when and how they receive them. Maybe you've got a young child. They're not quite ready, right? Because kids can't inherit accounts until they're over the age of 18. Well, then you could say, okay, maybe at 18 they get 10%, 20 they get another 10%, so on and so forth, right? And then you can also decide, who makes decisions if you're incapacitated, like I mentioned with those power of attorneys, medical directives. Who manages the assets for your minors? Maybe you have a loved one, a sibling, a close friend, somebody you trust in terms of taking over for your kids if something were to, God forbid, happen to you. And that can be a really big piece that's kind of stressful, right? So having a good estate plan is really just out there to protect yourself for the future when that time comes, making sure you've got it lined up how you want your assets to be passed along after you're gone and how you want everything to be handled. And then whoever that trustee or executor of your estate is, you want to pick somebody that you really trust and feel like you can rely on. Because at the end of the day, there's no estate police, right? Nobody's going to come and look and regulate all that. So making sure you've got somebody you really feel confident in and can rely on is really critical in that type of thing. And I want to share a little bit about, a client sale that came up last year, really. We had a couple, and they're young in their 50s, and they've been married a little over 15 years. Husband was a FERS employee with the national parks and just passed away unexpectedly at the age of 53. It totally caught her out of the blue. It caught us out of the blue. I mean, it was completely wild. And then, what we've made sure prior to that time frame is we had all her beneficiaries lined up and named how we wanted them. They had an estate plan in place, with a pour over will. With them, they had some debts, things of that nature, good debts, mortgages, things of that type. And then they also had some life insurance in place in the event, something happened, that benefit went to the spouse. So then, it was going through that place of trying to claim everything and bring everything together. And it was definitely tough for Miss Jane from that standpoint. It took months just to bring all the accounts under her name, to get the mortgage title just under her name. Being able to get all the bills squared away was a little bit stressful for her. She took some time away from work. Filing all those claims was really just an emotional process. I think one of the biggest things that people tend to underestimate is the impact of how emotional that can be. And I'm sure for some of you out in the crowd today, you might be aware of that, but it can be really, really stressful for folks. They're out there and trying to deal with all this on top of maybe their work schedule and dealing with their day-to-day things. And luckily she had a good plan in place, but even then it was, stressful and took a lot of time to really bring everything into one place. And then even still there's some things where she needed to get ownership over it. It wasn't titled within the trust properly. And then from that standpoint, then it required extra steps, right? Like having to go through, maybe get a letter of a small estate or things of that nature that can sometimes help mitigate having to go through that probate process. But it was very stressful. It took her a long time to get through it, a lot of good calls that we had, and just working through that piece by piece. I think the key thing is you just want to take it one step at a time, right? Just list out everything maybe on a piece of paper, maybe digitally if that's easier for you. And I'd say, okay, I've got all these different things to deal with. How do I want to tackle these? Let's look at what's most important. Maybe that's taking care of who's going to execute the will or trust, or making sure all the bills are paid on time. And then from there, I'd piece it out. I'm going to do this step this week or this month. I'm going to do this step this week or this month. There's really not a huge rush to have to get it all done right away, right? I mean, those things will all continue to move along, but what you really want to do is just take your time, and you don't want to feel too rushed having to go through that, right? So, just a couple closing thoughts I want to leave you guys with. I know we got about 30 minutes, and I want to leave a little bit of time for questions and open up any conversation anybody wants to have. But some of the key things to be looking out for is, how your accounts are titled, how they're set up. Are they in a tax deferred status? Are they after tax? Are they just bank accounts, things of that nature? Are you somebody that's subject to RMDs? Do you need to maybe let your loved one or beneficiary know what that RMD situation is upon passing? Keeping an eye on your tax picture. The more you can have in that after tax situation, that can really open up a lot less stress for those loved ones when they're going through that claimant process. Making sure you've got a good estate plan in place or any proper protections in place that maybe you need. Maybe that's a life insurance to pay off a mortgage, things of that nature, so that somebody's not left with that stress or that financial burden upon passing. And then, just making sure that you've got a good plan in place. I recommend, if you can, just have everything laid out as clean as you can, maybe in a binder, maybe it's online, letting whoever your executor or trustee know where those documents are when that time comes. And like I mentioned, take your time, don't rush. There's really no rush from that standpoint. The key thing is just making sure you understand it as clearly as you can, and that you're not, taking any steps that might jeopardize anything from that standpoint. Awesome. Well, I just want to open it up to some questions or things of that nature, if anybody's got any.
You have a question, I'll just repeat it to him so he can hear it. But any questions? Yep.
If you have a loved one that's passed away, you don't know about any other accounts that you have your way with search or something.
Mm. Yep, that's a good question. So Kai, you said, excuse me, if you have someone, a loved one who's passed away and you don't know all of their information, is there a search or something that you can do that you would know with all the accounts, kind of all their financial, I guess their fingerprint, things that they've touched? How would you go about finding that out?
Yeah. Yeah, that's a really pretty tricky part, especially if there's not like something cleanly listed out on a piece of paper. Something that can help from those standpoints is there's quite a few websites, both state like local wise, and then as well as on a federal level. A really popular ones like the missingmoney.com, things of that nature. But if an account sits unchecked for a long period of time, those accounts are still reported at the end of the tax year to by those different financial institutions. They have to submit whatever the correct documentation is, depending on the account type. So they're still being submitted. So if you're in that kind of situation, I'd recommend, reaching out to the local state office or something like that. Sometimes they have an online website that allows you to search for those different accounts. Otherwise, if you have some sort of intuition as far as maybe the institution, and then you can also just reach out directly to the institution, and then they'll provide you with the steps you maybe need to take in order to get some eyes on that account as well. But probably the first best step would just be reaching out to the local state or reaching out to that like missingmoney.com if it's sat for a while and doing a search for that person.
Thank you. Any
That's a
other
great
questions?
question. Thank you.
Any other questions for Kai? Yes, there's a gentleman in the back. Hmm? I'm sorry, I can't see. I don't have my glasses. Sorry.
So in this digital world that we now live in, what is how can you mitigate like this whole, what's the password to access it? We know where the accounts are, but like if you don't have the password or authenticator, like the phone's no longer active, like is there a way to get around some of that stuff?
So the question is, in our digital world, even if you know the institution and you know the website and all that, is there a way to get around? Is there a way to get around needing the passwords and the authentication codes and all that? If the phone is locked, how do you get around all those things?
Yeah. Yeah, that's a great question, and it's kind of tough from that standpoint. There's really only two different approaches, right? And that's really either having like a estate plan in place that designates all those specific things, or having to go through the probate process. So if somebody passes away unexpectedly and maybe you know all the information but don't have access to it, if they've got a trust or a living will, pour over will in place, usually you can just submit those documents alongside a death certificate to that company and take over and get access to those things. But if they don't have that in place, then that typically requires going through the probate court and trying to fight out to get that information and then coming back to that institution, which can definitely be a little bit trickier.
Thank you. Thank you for your question.
Yeah, thank you.
Yes.
I really need to do the state his checking account. You are me, I was not every, so I'm assuming the answer is I don't do the state. Now when I pass, obviously I'm sure I don't do my girls.
Okay, so the question is, excuse me, everything with her husband was joint and she was the beneficiary. So she's asking, does she have to have estate planning for that since she was joint and beneficiary on everything as related to her husband? And I guess second to that would be, would she need estate planning then for her kids?
Yeah, that's a phenomenal question. Yeah, that's a really great question. I think that hits exactly on it. I mean, having your beneficiaries in place or being joint on an account can be really helpful, makes that a lot easier. Sometimes there's still some additional documentation or things the company requires to change things around. But as long as you're listed or named on the account as either a direct beneficiary or you're a like a joint account owner or some of that nature, usually you can claim those things without ever having to go through any sort of a probate court or things like that. So that's a really key, easy piece to handle usually. Now, as far as kids go, it definitely depends. I mean, if they're over the age of 18, then most of the time you can get away with, just designating them directly on any of those accounts as beneficiaries. It gets a little bit trickier when they're under the age of 18, especially if you have young children, because kids under 18 can't directly inherit assets. So then from that standpoint, it gets thrown into probate court if they're under 18 as far as who's going to be the guardian of the assets, who's going to take care of the kids. So if you got kids under 18, an estate plan is definitely very helpful. For kids over the age of 18, you can typically use that direct beneficiary style format as well.
That's helpful. Hopefully that answers your question.
Like, ask about you want to send it the list, write it itself, credit the work, all the issues. I don't want any scammers to go in and try to get a very common name, like the name of try to rack up that. So big piece of mind, send that certificates of experience, record facts and candidates. You tell one of them, they will tell all the other two. We that person they
That's a good tip. She was just giving a tip to the audience, which I think was because it was more of a comment, right?
Yeah.
But okay, yeah. Yeah, very good tip. Very good tip about the death certificates, giving that to all the credit bureaus so that no fraudulent activity could happen, kind of freezes the activity right where it is. So very good. Yeah. Any other questions?
Absolutely.
Oh, anyone else? Okay. And I know that this is a topic that it engages a different part of the brain, but is still very important to go over because it is the worst thing to have to be filling out paperwork while you're grieving and having to sort through all of that all at the same time. And I know some of you have probably experienced that. So if we can do things now versus trying to do it all at once later, I know Matt and I often talk about like we getting our things together as well, making sure the kids are taken care of and what do we need to get in order, and Kai is helping us work through that process. And that's what I love about they are a Christian organization, so Christian, they're faith-based. It's not something that they push and promote out there, but they are a believing organization, and they take you by the hand. So everything that he's listed, if it felt overwhelming, like, oh my gosh, I have to get all these things in order, they literally take you one step at a time, and it's at your pace. And also, Kai, if you could for a moment, could you share a little bit, I think it's in the fall and in the spring where you guys offer the 6-week online program. Could you tell a little bit about that, please?
Yeah, absolutely. Thanks, Jasmine. Yeah, I know Jasmine and Matt took our Financial Foundations course is a class that we offer. It's a free 8-week Zoom class. Of course, the cost there is your time, right? It's about 16 hours of financial foundations education. But it's a really great class, I think, for all ages, whether you're just getting started later in life, looking for some general ideas is what you can maybe implement next. Maybe you're, real young and just kind of getting into that world of finance. It's a free 8-week course that we do. I think our next one will be starting up around January. I'd have to get an exact date on that off the top. I'm not sure. But I'm happy to send that over to Jasmine if anybody has an interest. But yeah, by all means, it's a great free 8-week class. It's on our website as well. I'll put this is my contact information in our website. But it's a really great class, I think, just for all the different pillars as far as just kind of getting things together in that financial world. And I appreciate the kind words there, Jasmine.
Yep, awesome. Thank you. Thanks, Kai. All right, can we just give him a hand? I know he couldn't join us physically, but thank you so much for taking the time out.
Yeah. Thank you all so much. I appreciate you talking with me and listening in, and there's some really excellent questions, so I appreciate that. I can tell y'all we're engaged, and It's really a treat to be on here with all you, and thank you again, Jasmine and Mary, for having me on. And by all means, if anybody's interested in getting a copy of the slides or anything like that, just let Jasmine know or let me know. I'm happy to send a copy out if that's easier or helpful for anybody. So appreciate you all joining me here today and having me on.
Awesome. Thanks, Kai. Take care. We'll see you soon.
All right, great. Thank you all.